Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dynagreen Environmental Protection Group Co. Limited Annual Report. Dynagreen Environmental Protection Group Co. Limited provides a wide range of businesses and services related to environmental protection and waste management. At its core, the company invests in and operates municipal waste-to-energy plants in China, generating power from waste treatment activities. In addition to this primary function, Dynagreen offers various other services including construction engineering for waste management facilities, hazardous waste treatment, garbage transfer, sludge treatment, and collection, storage, transportation, and disposal of kitchen waste. The company also provides specialized services such as gutter oil and swill oil treatment, municipal sludge, and excrement management. Dynagreen's services extend to offering waste incineration treatment to local governments and providing electricity to power grid companies. This comprehensive approach enables the company to play a significant role in China's environmental protection efforts while generating revenue through its various business activities. Dynagreen Environmental Protection Group Co. Limited market capitalization of $10 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Dynagreen Environmental Protection Group Co. Limited holds a significant advantage in their industry. Dynagreen Environmental Protection Group Co. Limited trades at a higher price-to-earnings ratio of 10 times and a higher price-to-book ratio of 0.8 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.04%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified by examining the key factors that contribute to an increase or decrease in revenue. On the growth side, the main drivers include the expansion of existing projects, overseas expansion, and the steady operation of ongoing projects. Additionally, the company's ability to increase waste treatment, electricity generation, and steam supply volumes has also contributed to revenue growth. The company's proactive approach to expanding its waste disposal business and co-processing of sludge has also led to increased revenue. Furthermore, the optimization of refined management practices has resulted in reduced environmental protection consumables and auxiliary fuels usage, contributing to cost savings and revenue growth. On the decline side, the main driver is a decrease in gross profit margin, which has resulted in a revenue decline of $557,277. The company's inability to maintain its gross profit margin has had a significant impact on its revenue, highlighting the importance of maintaining profitability in key business areas. The net income of the company experienced fluctuations between 2023 and 2025. In 2023, it decreased by $11.4 million due to unknown reasons. However, in 2024 and 2025, it increased by $6.5 million and $5.3 million respectively, driven by steady growth in revenue and net profit attributable to shareholders. The profit margins of the company also underwent changes during this period. In 2023 and 2024, profit margins were not applicable due to various reasons. However, in 2025, they improved significantly due to a marked increase in cash flow from operating activities. The net profit margin increased from 45.44% to 46.67% in 2025. The fluctuations in net income and profit margins can be attributed to several factors such as changes in revenue, expenses, tax incentives, and public perceptions on the waste-to-energy business. Despite these challenges, the company was able to improve its profit margins in 2025, indicating a positive trend in its financial performance. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided data, the net cash flows from operating activities have been consistently positive over the past 2 years. In 2025, the company generated $1,845,911,667.47 in positive operating cash flow, while in 2024 it was $1,438,470,488.62. This suggests that the company is successfully managing its operations to produce a surplus of cash, which can be used for various business purposes, such as investing in growth initiatives or paying off debts. The company's debt level has undergone significant changes over time. Initially, total liabilities decreased from RMB 12 billion, 87 million, 167,010.66 to RMB 10 billion, 598 million, 846,286.6, indicating a reduction in overall debt. Furthermore, total outstanding borrowings also decreased by RMB 775 million, 194,064.2 from RMB 9 billion, 145 million, 64,463.98 to RMB 8 billion, 369 million, 870,000. 399.78. Short-term borrowings saw a substantial decrease of -46.28% and -43%, while long-term borrowings experienced a decline of -3.74% and -16%. In terms of interest expenses, the company has seen a notable reduction. Interest expenses have decreased by 16.6% from RMB 453 million, 395,000 and 45.98 to RMB 378 million, 868,279.29, with net interest expenses also decreasing by 14.4%. The total interest expenses have been significantly reduced, dropping from $52,853,628.25 to $17,536,704.46. These changes indicate a decrease in both debt level and interest expenses for the company. Management is optimistic about the company's future prospects. The company aims to become a world-class environmental protection industry group by focusing on core businesses, adopting leading technologies, and implementing efficient management practices. This vision is driven by the rapid growth of the industry, which is being fueled by government policies supporting sustainable development. To achieve this goal, the company plans to actively pursue investment opportunities that will enhance profitability. The company's investment strategies for its subsidiaries will be discussed in a separate section, but overall, the focus is on driving high-quality development and efficiency enhancement. With an increasing emphasis on overseas markets, the company is well-positioned to capitalize on emerging opportunities and solidify its position as a leader in the industry. Management believes that the company's outlook is positive due to several factors, including policy support, a shift from scale expansion to high-quality development, and growing demand for environmental protection solutions. As the industry continues to evolve, the company is poised to thrive and become a prominent player in the global market. The company's financial history reveals a consistent practice of distributing profits to its shareholders through dividend payments. This indicates a commitment to rewarding investors and sharing the company's success with them. On the other hand, there is no record of share buybacks, suggesting that the company has chosen not to repurchase its own shares in recent years. That concludes the financial summary for Dynagreen Environmental Protection Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.